Okay, let's dive right into this explainer and discover how Intel didn't just invent the microprocessor, but actually pioneered the entire modern Silicon Valley business blueprint. You know, when we think of the modern tech landscape today, the venture capital, the crazy equity splits, the relentless pivoting to stay alive, we usually think of the latest apps and social networks. But the truth? The actual DNA of this entire ecosystem was sequenced all the way back in 1968.
To understand this giant, here's our roadmap for today. We'll start with the birth of a giant, move into the venture capital Magna Carta, explore the microprocessor revolution, examine the pivot to processors, and finish up with the Pentium era.
Part 1. Birth of a giant. Leaving Fairchild Semiconductor.
Picture this. It's 1968, and industry legends Robert Noyce and Gordon Moore decide to leave Fairchild Semiconductor. They were just incredibly frustrated by the sheer size and all the bureaucratic bottlenecks there. So the crucial question they faced was, how exactly do you structure a brand new startup so it becomes a behemoth rather than just another stagnant failure? They were literally writing the rules as they went, trying to figure out how to balance risk, attract capital, and keep brilliant minds motivated. And this brilliantly illustrates the exact problem they were trying to solve. They wanted to escape that rigid, old-school corporate structure of Fairchild and build a truly egalitarian company where founders were actual owners. Back at Fairchild, an early investor had an option to buy the company for $3 million. When that option was exercised, sure, it provided a nice return, but it instantly relegated those brilliant founders right back to the rank of mere employees. Noyce and Moore learned a massive lesson from this. They realized that having founders own a meaningful, completely uncapped stake in their own company was the absolute most powerful motivator for success.
Section 2. The Venture Capital Magna Carta. Looking at the 1968 Arthur Rock memo.
To actually pull off this new structure, they turned to venture capitalist Arthur Rock. He drafted a 4-page business plan that changed Silicon Valley finance forever. It is basically the Magna Carta of venture finance. Let's quickly break down its 4 pillars. First, pricing. How do you split things fairly? Second, incentives, making employees owners. Third, security terms, mitigating risk for the investors. And fourth, governance, sharing board control.
Pricing was obviously a massive hurdle. By setting a $2.5 million pre-money valuation, the founders could secure a massive 50% equity stake without needing to personally front millions of dollars in cash themselves. Think about it. They were raising $2.5 million from investors, right? So by valuing the founders' existing contributions, their ideas, their unmatched expertise at $2.5 million, they created a perfectly balanced 50-50 split on the upside. It fundamentally respected the idea that the founders were bringing just as much value to the table as the financiers.
But what about the risk? To protect the investors placing this highly concentrated bet, they used convertible notes that would only convert to common stock if the valuation reached $5 a share. This is genius. It meant that if Intel failed to thrive, the investors were protected because they were first in line to be repaid as noteholders ahead of any common stock. But if the company succeeded, they would gladly convert those notes into common stock and ride that massive wave of growth right alongside the founders. A perfect balance of the scales of risk and reward.
Part 3. The Microprocessor Revolution. From memory to central processing.
Now, what's really fascinating here is that Noyce and Moore's original plan was strictly to replace expensive magnetic core memory with semiconductor memories. Look at how rapidly their tech built upon itself. Starting with the 3101 RAM chip in 1969, leading right into the 1103 DRAM chip in 1970. This was a really big deal. It was the first chip large enough to store a significant amount of information, and it actually started replacing those old magnetic cores. But just 1 year later, in 1971, the trajectory takes a completely sharp turn with the 4004 microprocessor.
The crazy part? The invention of the 404 wasn't even their main goal. It was a totally fortunate byproduct of engineer Ted Hoff just trying to design cost-effective chips for Busicom calculators. Hoff was looking for efficiency, and in doing so, he conceived a plan to put an entire central processing unit onto a single chip. The result was absolutely astonishing. The 4004 crammed 2,300 transistors onto a chip just a fraction of an inch in size, yet it packed the computational power of the old ENIAC computer. To put that in perspective, the ENIAC was a massive machine that took up 3,000 cubic feet of space and relied on 38,000 fragile vacuum tubes. This was an absolute paradigm shift.
Section 4. The Pivot to Processors. Looking at the Andy Grove era.
As Japanese competitors began totally dominating the memory market in the 1980s, Intel needed a savior.
Enter Andy Grove, Intel's very first hire. Grove was a Hungarian refugee who survived Nazi occupation and Soviet repression. As an astute engineer and a fiercely careful student of management, he made the absolutely brutal decision to abandon the memory market the company was founded on and pivot entirely into microprocessors. He saw that microprocessors were the less cyclical, far more promising field, and bravely led Intel's total transformation.
But making that massive transition work during the brutal 1981 recession was not going to be easy. Grove instituted what became known as the 125% solution to keep the company alive. When the economy tanked, most companies out there were laying off huge chunks of their workforce. Intel had already experienced the trauma of massive layoffs in a previous recession, and Grove wanted to avoid a repeat at all costs.
This required some unbelievable cultural grit. Salaried employees literally took on an extra 2 hours of work every single day, entirely without pay, and eventually accepted 10% pay cuts just to ensure the company survived the downturn. Now, of course, it wasn't universally popular, but it worked. By asking for shared sacrifice rather than just cutting heads, they actually accelerated new product development, and eventually all those cuts were completely restored and retroactive raises were made.
The result of Grove's fierce management and that strategic pivot was nothing short of astronomical. He drove annual revenues from $1.9 billion all the way up to a staggering $26 billion. By closing old plants, investing hundreds of millions in new manufacturing technology, and focusing relentlessly on execution, Grove completely turned Intel from a struggling memory manufacturer into an unstoppable processor juggernaut.
Part 5. The Pentium Era, dominating the personal computer market.
This massive financial leap brings us straight into the 1990s, where Intel's microprocessors became the undeniable engines of the entire personal computing boom. Building on their huge victory of getting the 8098 chip into IBM computers, Intel just steadily marched right up the capability ladder. The 286 powered the early PC era. The 386 brought in multitasking. The 486 was heralded as a veritable mainframe on a chip. And finally, the fifth generation, the 1993 Pentium. It was an engineering marvel with 3.1 million transistors that could execute over 100 million instructions per second, lightning fast.
But the genius here wasn't just in the silicon. Rather than just selling hidden, invisible parts to computer makers, they ingeniously marketed directly to the consumers, making Intel Inside a household guarantee of quality. I mean, before this, nobody buying a computer cared who made the tiny chips inside it. Intel changed all of that. They created consumer demand for their specific brand, effectively forcing computer manufacturers to use their chips because the public was actively demanding it. It was a complete masterclass in brand building that generated over $17 billion in brand equity alone.
So I want to leave you with this thought to consider. As we face the next great technological shifts, how will you use Intel's legacy of flexible finance, accidental genius, and fearless pivoting to build your own future? From Arthur Rock's brilliant 50-50 equity split, to Ted Hoff's accidental microprocessor, all the way to Andy Grove's fearless decision to abandon memory chips entirely. Intel's history proves that surviving in tech isn't just about the hardware. It's about how you structure your company, how you endure the really hard times, and how boldly you adapt when the market shifts right beneath your feet. Thanks for joining me on this explainer, and keep looking for the blueprints behind the breakthroughs.